Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
So let's frame that a little bit. On any given year, we can give up to how much?
So you can give up to, well, you can give any amount. You can deduct up to 60% of your AGI if you're doing a cash gift. If you're doing appreciated stock, which I prefer, you can deduct up to 30%
so
of
you
your
make
AGI.
$200,000, that means that you can give $60,000 worth of highly appreciated stock.
Right.
You know, and the one thing I will say is, regardless of if we're trying to claim a deduction or not, if you're giving and you have appreciated stock, really want to minimize the checkbook giving and focus, regardless of deduction or not, because when it comes to highly appreciated stock, let's say we have a share of a company with $15 cost basis, and let's say that stock is now 120. Well, that's $105,000 worth of unrealized gain that if we sold it to write the check, then you're realizing the $105 per share of gain and having to pay the 15 to 23.8% on that gain to then write the check to the charity. Whereas if you just donated that share at $120, you get the value of the share at $120, the charity doesn't have to pay tax on the gain. So we get to skip out on that. And so from a strategy perspective, I'm going to tell anybody who's giving,
always appreciate stock.
And frankly, I still like using the donor advised fund as the conduit to do it. I'm biased. I'm like you, I use donor advised funds. They're fantastic. It's like a checkbook for your charitable giving, right? And they have an online portal if you'd rather just, go online and have it send a check, or you actually can get a checkbook and write a check. The DAFs are awesome.
It helps with organization too, right? So when it's time for taxes, half the battle is gathering my documents, right? And going through, I put $50 here, going through all the little items. Well, if you're doing it through the donor advised fund, then it's all organized through there.
Precisely.
So it makes very simple come tax time, which I appreciate.
Well, and some of it then is looking at the cost base. I mean, there's some.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.